So for those of you who used last night's game plan, you could have had a phenomenal green day today, day trading 0-day options on the SPY. In terms of the game plan, I made it very, very clear the zone to buy call options was going to be 2 to 4 points below the previous closing price. The previous closing price was at 539, making the zone in between 537 to 535. With that being said, in terms of the overall price action, the SPY ended up bottoming 3 points below the previous closing price during the pre-market trading session at 536, having a massive move to the upside at 543. And if you stayed towards the end of the overall video last night, I made it very, very clear that I was interested in potentially buying put options on the SPY if 541.50, the breakdown and retest level, where the SPY has been consistently selling off for the micro at these key breakdown and retest levels. And if you're seeing 541.50 react as a resistance, it's going to start to sell back off to fill that gap towards 539. With that being said, there was over 2 hours of resistance towards my level. It was literally towards the exact highs of the overall day. And in terms of the zone I gave you, it was literally towards the exact overall lows. And the SPY ended up topping out towards 543 and ended up forming lower highs, red, green, red, bearish resistance for over 2 hours at the 541.50 breakdown and retest lower high level. And in terms of the overall zone, the SPY ended up bottoming during normal trading hours at 537. The zone worked twice for calls, and in terms of puts, you could have had a phenomenal opportunity on puts as long as you held with the overall situation after the confirmations formed. With that being said, I'm going to continue to prepare you to trade the best setups at the best prices. The stock market is setting up for a highly predictable, lucrative trading opportunity heading into tomorrow. With that being said, let's get straight into the newly updated price action analysis. In terms of Team Roar, G-Roar ended up coming back much better and stronger today, going 6 for 8. 6 wins, 2 losses. In terms of my own personal trading, I ended up going 2 for 4, finishing the power hour trading session very, very strong after taking some losses on call options, switching to puts for an overall bearish close. I'm going to be breaking down the overall trades towards the end of this video. Let's get straight into the newly updated price action analysis. So, in terms of the overall SPY, this is what you need to be aware of heading into tomorrow. The daily chart foundation is setting up for overall bearish. Now, one thing I will say is even though this daily chart pattern is considered bearish, there are some potential signals where the SPY is uptrending and it is trying to form higher support, which could be considered bullish, but it's also maintaining these lower highs, trying to drop back down, and we are currently gapping down during extended hours. So one thing that I want you to understand in terms about bearish daily chart patterns and bearish foundations in general, they could potentially play out bullish sometimes if the market is uptrending and forming higher support like the SPY is doing. But in terms of the overall short-term micro trend, the pattern is still considered overall bearish, but we are going to be bouncing at key oversold levels, right? And like I said, even though it is considered bearish, there's going to be sometimes in situations like these, since the market has been trying to break out, retest, form higher support, and fill the gaps above, where it could potentially react bullish. These are just things to keep in mind, right? When bearish patterns are placed in uptrends with break and retest, forming higher support, trying to push higher to fill the gaps, they could potentially play out bullish. Just want to bring some awareness to that. But in terms of the overall foundation, it is considered bearish. It's just where the foundation is placed is not the most bearish, so it could play out either way in a sense, but I am currently leaning more towards bearish, but we're going to be confirming this to trade the best setup at the best prices to determine the overall micro trend heading into tomorrow using these levels and using the proper confirmations. Just want to bring some awareness to that, man, because one thing that a lot of traders get wrong with candlestick patterns is understanding that just because the pattern is considered bearish or bullish doesn't mean that it's going to play out bearish or bullish, because it can be placed in a certain price or in a certain strategy or in a certain situation where it's going to likely do the opposite. Many traders get that wrong in a sense, and I did want to bring some awareness to the overall placement, right? So with that being said, in terms of the overall SPY, if you go back historically, I'm just going to quickly show you this pattern, right? This is the main point that I wanted to make in terms of this overall pattern. So you can see right here, the market was selling off. You see how the SPY is selling off here on the daily chart, and then it pushes back up with this red pin. The high of this red pin is towards the previous support. So the SPY had a breakdown. It cracked below the support, and then the high of this pin is the retest forming the lower highs. And then this pin right here is facing to the downside, forming lower highs. And then the next day, a small spike above the previous closing price and a strong bearish trend day. So you can see the SPY had a breakdown. It had a retest. The high of the retest was this previous support right here, reacting as a resistance level, red facing to the upside, red facing to the downside, overall bearish sell-off, overall bearish trend day, right? And if you look at the same sort of pattern, it is literally forming. So if we take a look at the same overall pattern, you're going to see right here, you have the red facing to the upside, red facing to the downside. The difference in terms of the placement is the SPY isn't downtrending. The SPY is actually breaking above this previous resistance at 534, retesting at higher support. But in terms of the overall pattern, it's considered bearish. But in terms of the placement, the SPY is technically still forming that higher support, and it's on an uptrend rather than a downtrend in that situation. You see, that's where a lot of people get wrong in terms of candlestick patterns with daily chart foundations, 30-minute candlestick chart foundations. The pattern could be considered bullish or bearish. But like I said, if it's placed in an uptrend or downtrend, it could potentially play out within where it's overall placed, which is why tomorrow we're going to have to be extremely strategic with confirming if the foundation is going to play out bullish or bearish, right? Just want to bring some awareness to this overall situation, right? But with that being said, man, you can see multiple times where that pattern did react bearish as all. Overall, and there will be opportunities to be buying put options at key resistance. There will also be new opportunities to be buying call options at key oversold levels. So we are currently gapping down. The SPY ended up closing at 537.61, currently trading at 533.40. In terms of some levels for call options, going to be keeping the focus on a bounce, on a potential rebound at key oversold support levels. So in terms of the overall levels, man, you need to be aware this is going to be a crazy overall zone to be watching. But first things first, I'm just going to quickly look at the daily chart here to just bring some awareness to some key overall levels, man. In terms of the overall daily chart, you can see the previous closing price is going to be an insane level to be trading at heading into tomorrow. So what I want to bring awareness to is take a look at 537.61. You can see when 537, so 536.70 right here is the low of this. When this reacts bearish and gaps down, the market has a massive sell-off. So if you were to compare the overall pattern right here, red facing to the downside, red facing to the downside, market gaps down, massive sell-off, right? Just some things to keep in mind, right? But in terms of the overall pattern, we could potentially bounce back, start to fill the gap, and then once we fill the gap, sell off. That'd be the best entry for puts, especially since we're gapping down. But just want to bring some awareness to that overall pattern as well. But I'm keeping my main focus on this on this 2-day daily chart pattern where it was red facing to the up, red facing to the down, tries to sell off, tries to recover, and then starts to drop back down. I'm keeping my main focus on that rather than just potentially playing this as an oversold gap down to just buy puts it open for a strong bearish trend day. I would much rather wait for puts towards the previous closing price if there's bearish reactions. But another point that I wanted to address, and this is the main point that I wanted to address because this isn't the most strongest or safest overall confirmation to just buy puts at the overall open at over levels, because I am considered buying call options at the oversold levels. But with that being said, man, this is what you need to be aware of. In terms of the overall situation, this 536.70, that is make or break. So 536.70 to previous closing price is make or break. If it reacts to support, the SPY is going to start to have a move to the upside. Now, if it does react to support and the SPY starts to break out, this is the level. This would be, heading into tomorrow, one of the best levels to attempt to buy put options. The SPY has been on a short-term trend where it keeps on having breakdowns in retest. You can see right here, this was support right here at 542. It had a breakdown, a crack below support. It reversed the gap. That's where I told you to buy call options at the gap for a gap close reversal, along with the green, red, green bullish confirmation, right? But with that being said, once it spiked back up to this previous support right here, this previous breakdown and retest level, the SPY ended up selling off in a great confirmation to be using as of lately on the 30-minute chart with the breakdown retest strategy. Once you identify that a key support level cracked right here on this bottom wick and has a big sell-off, when it spikes back up to retest that previous support for the first time, if you're seeing this green wick facing to the downside, SPY is going to sell off. If you're seeing this green wick facing to the downside, SPY is going to sell off. But remember, that has to be placed in a situation with the strategy where the SPY cracks the support, has a big drop, spikes back up, retest, forms resistance rather than this forming at potential support. The placement is everything. Like I said, a lot of people lose money trading price action and candlesticks because they think the pattern is just overall bullish and bearish, but they don't understand the placement of the overall pattern and candlestick. Are we placed at a bullish strategy or a bearish strategy? Are we placed on an uptrend or a downtrend, right? Because some people, they just define certain candlestick and candlestick patterns as bullish or bearish, but if they're placed in a situation where it's the opposite, it could potentially play out as the overall opposite, right? That's why it's important to use the strategies as well and just understand, basic support and resistance and overall placements of where these bullish or patterns can potentially form, because if it's placed a certain way, it could potentially do the opposite of what it normally does in terms of the foundation of the candlestick on how it normally reacts, whether it's bullish or bearish. So that's what you're going to want to look for at this new level. And you can see right here, this was the new breakdown and retest level at 540.70, which is why I told you in last night's video, 541 to 540.50, right? You can see right here, this was the breakdown, right? It drops, spikes back up. Red, green, red is bearish. Resistance for 3 fucking hours is bearish. Buy the put options, right? So you should have analyzed that. And I mentioned this in last night's video. I told you, man, when we spike back up to 540.70 to 541.50, the SPY can have a breakdown and retest. We had a big drop, spikes back up to the low of this green wick, spikes back up to the low of this green wick, starts to sell off, red, green, red, resistance for over 2 hours. Clear red, green, red, clear red, green, red, bearish confirmations. Market starts to sell off. Buy the put options. You should have been all over puts once you noticed that this breakdown retest level right here at 541 was reacting as a resistance. That there was resistance for several fucking hours. That there was red, green, red for several fucking hours. Red, green, red twice, right? And sometimes the trade is going to take time to play out. And as the trade is playing out, it's likely going to try to work against you. This is why you need to hold the overall trades, man. You need to be trained to hold the trades. Put in your max risk per trade as your R multiple. The most you risk is what you put into the trade. And the most you can lose is what you put into the trade, right? Could be a couple % of your account. And just hold the trades. If you were buying puts to the level I gave you, 540.70, when there was red bearish 30-minute candlestick confirmations, when there was red, green, red, when there was resistance for fucking hours, you likely would have been down at first, but the overall trend is bearish. This is why you need to hold the trades, because sometimes when you enter a trade, you're not going to be able to time it perfectly. It's going to take a very long time to play out. The theta decay is going to eat you. But as long as you're going close enough to where you're not far enough to where it's not going to go deep in the money, you're still going to print like fucking crazy if you're right about the fucking trend. Eventually, this is just chop. And a lot of people go wrong in the chop by selling, by cutting losses, by not letting the trade play out. This is just chop. What is the chop doing? Red, green, red is bearish. All this resistance facing to the downside is bearish. All of this resistance for hours is bearish. Eventually, it's going to snap. And in terms of like, if you're wondering, well, how long can it take for the trend to snap? Usually, it does not chop like that for more than 2 hours. So usually after like 2 hours, the trend just kicks in. So if you're looking for that best overall time where you don't even want to wait, but if you do this, you're going to miss out in a lot of situations. But if you just want an understanding of when the trend usually kicks in terms of like, well, what's the longest time it's going to take? 2 hours. Very, very rare, 3 hours. But typically like 2 hours to, 1.3 hours. But with that being said, man, if you played the trend, listen to the video, you should have been in on fucking puts. As long as you held the trade with the trend, you should have been selling and closing out once we drop back down and under to previous closing price. And then these are the levels I told you to buy calls. Below 539, a 2 to 4 point drop. We literally bottomed 3 points in the pre-market, massive move to the upside, sold off towards the level. You can literally go back and watch the video. It was fucking perfect, especially for a choppy day like today. And then you can see right here, we had a breakout and retest. This is resistance right here. This is the breakout. This is the retest. Look at this red trend reversal candle here. Look at this red trend reversal candle right here. Look at this red trend reversal candlestick right here. Pay attention. When SPY breaks above this resistance right here and drops back down and forms that same red trend reversal candlestick at the higher support, next 30 minutes is bullish, next 30 minutes is bullish, next 30 minutes is bullish. You see how that plays out, right? You got to be able to capture these trends in real fucking time. So anyways, man, the new breakdown and retest level is right fucking here. This is the new level right here towards this 540.50, right? So originally the levels were towards 545. You had some support right here in the pre-market, dropped back down, retested here with the red bearish, started to sell off. Then the new level is right here at 541.60, dropped, spiked, lower highs, started to sell off. The new level right here was at 540.80 to 541.50, dropped, spiked, started to sell off. So the new level to attempt put options is going to be at 540.50 to 541. That's the new zone for puts. In terms of a break of trend, the bulls would need to break above 542, react to support, push above 543. Once that occurs, and if that occurs, if at any point in time, then the bulls are going to fucking take this to fill that gap towards 549. And then once we finally break above 549 and react to support and go into the 550s, then we explode up to fill that gap at 564. As long as we are reacting bearish towards 541, the SPY will continue to sell off and form lower highs and drop back down, right? And as long as we react bearish at 549 and don't break above, the SPY will continue to sell off and drop back down. With that being said, in terms of some levels for call options, I gave it a new level for puts. It's towards 541. You can also keep an eye on slightly above the previous closing price. You can keep an eye on, another level you can keep an eye on. We closed at 537.61. Another level that you can keep an eye on is towards, I would say like 540. Yeah, just keep an eye on 540 to 541 for that overall put zone. This previous closing price is going to be a short-term make or break level, man. It's even considered a breakdown and retest level. We had support right here at 537.60. And look, this was the breakdown. This is that same green 30-minute candlestick facing to the downside to retest. Then the market sells off. So it's going to be very interesting to see how we react at the previous closing price. In terms of the daily chart pattern, it is saying, especially if we gap down, that the previous closing price will be reacting bearish, likely 2 points above. So we closed at 537.60. The overall put zone would really be towards that 539.60 to 541 overall range to react bearish. That is considered the best level for puts for currently a gap close reversal, right? And a crazy level that you need to keep an eye on, I'm telling you, is this make or break level right here. Take a look at this, man. This is going to be such an interesting level to see how we play out heading into tomorrow, right? So I gave you the best zone for puts. I gave you future trade ideas to use at the overall levels as well. I gave it the best zone for puts with the breakdown and retest strategy. I gave it a gap close reversal level at 549 as long as we react bearish once that hits, right? Just wait to trade the best setups, the best prices. You're going to be green at the speed of light once these levels hit and you wait for the proper confirmations. So this right here, this is going to be a crazy level, man. Look at this level right here. This 533, man. 533 reacts to support, forms higher support, starts to uptrend. We fill the gap at 537.60. We fill that gap. SPY's going to try to sell off within time, but it's likely going to try to bounce to that 540 to 541 breakdown retest level, push a little higher, then start to sell off. And then later in the day, if you see it selling off towards the level, try to higher levels. If you see it going under previous closing price, try the previous closing price as well, but be a little bit careful in that situation. Aim for the higher levels. But look, man, 533 is make or break support. Look at this massive move. We're going to get a massive move heading into tomorrow at 533. If we react to support, we're exploding up slightly to fill above the gap, opportunity for calls. If we're reacting as a resistance, market's going to fucking flush, right? So that 533 level is absolutely fucking crazy, man. Just go back historically and look at how the market reacts at 533. Another crazy level is going to be 541. Another crazy level within time is going to be that 548, 549 gap. But it's make or break, man. 533 is make or break. You can see, when it reacts to support, I just showed you, it quickly goes up into the 540 range. Right here, it reacted as support. It quickly goes up to 542 right now. So if we break above, react to support, 533, we're going to start to push to 541. That would be the best level considered for put options, right? And then for a break of trend, I told you, very unlikely that this happens tomorrow. But for a break of trend, it would need to push above 542, react to support, break above 543, drop back down, hold that overall zone. And if that occurs, that's when we're finally going to get that move to 548 to 549. Very unlikely to happen tomorrow, especially with the daily chart bearish foundation and especially with the gap down. Like I said, man, this 540 to 541 is a strong put zone heading into tomorrow with the proper confirmations. You're simply looking for resistance, top wicks, top wicks, top wicks, top wicks. Just go ahead and study historically. Every single time the SPY has been cracking below a key support level, dropping back down and forming this green wick facing to the downside, it's been selling off, man. Look at all of the times it's happened. As a trader, you have to analyze the 10-day, 30-minute chart and look for short-term patterns that are repeating trading at specific levels, at specific strategies. And a strong pattern that's been repeating as of recently is this 30-minute bearish pattern where you can see right here, there's support at 541.60, market sells off, spikes back up, it retest, breakdown, retest, lower highs, green facing to the downside, 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 market sells off, market sells off, market sells off, and it's at that breakdown, retest, breakdown and retest level, right? And also the red, green, red bearish pattern continues to work, especially when it's formed at those lower highs, man. You had a lot of support right here. We had a breakdown, we had a retest. This green 30-minute facing to the downside is bearish. Red, green, red is bearish, which is why I did puts for the last 30 minutes. I tried calls first, did not work out, switched to puts as soon as this 30-minute candlestick closed red, red, green, red. Lower highs, this previous floor cracked. It's now resistance for fucking hours. Red, green, red, right? And you could just see this previous floor right here cracked, spiked back up. The level I told you to buy puts, red, green, red, resistance for hours, green facing to the downside, green facing to the downside, market sells off, green facing to the downside, market sells off, green facing to the downside, market sells off, red, green, red, bearish, market sells off. You got to pay attention to these patterns with the breakdown and retest strategy, which is the inverse of the breakout and retest strategy. So with that being said, man, in terms of the overall level, I told you the 533 is going to be make or break. There should be some sort of potential oversold dip buying opportunity. But in terms of this overall pattern, I'll be blunt about this, man. If you look right here, red facing to the downside, red facing to the downside, if you were to solely go based off of that, like I said, if you go with the red facing to the upside, red facing to the downside, the market is going to attempt to reverse at an oversold level, fill the gap, and then sell off once we fill the gap. But if you go solely based off of this pattern right here and this pattern right here, this is what I will say. If the market stays below 533, it's just going to fucking flush. And then eventually it's going to bounce at some key levels. So like I said, this is make or break. You can see right now it is attempting to react as a resistance. But if we start pushing above 534, forming support, buy the fucking calls, ride the gap. If you're seeing the push above 534, this resistance, red, green, red, resistance, bearish, resistance. If it pushes above 534, breaks out, drops back down, forms higher support, green, red, green, green bullish 30-minute candlestick patterns, buy the fucking calls above 534. But as long as we stay below 533 and we're not pushing above and we're just maintaining below, maintaining below, maintaining below, we are not pushing above at all. If that occurs, then it's going to have this crazy fucking move where it's just going to keep on fucking dropping. Again, it has to just stay the fuck under 533 to 534. But if it's pushing above, and then even if it's dropping lower, but as long as it's pushing above that level overall, it's unlikely to happen. But as long as we are not pushing above, the market is going to try to sell off like this. So if you're seeing strong resistance, lower highs, market's not pushing above, you could try to go with the worst level, which could be the best level for puts, as long as we stay below 534. But like I said, if we're pushing above 534 and we're dropping back down, as long as we're pushing above that fucking level, you got to be extremely careful with puts and avoid, in a sense, look for the break and retest above 533. We spike to 534, drop back down, form higher support. We're in calls. As long as we maintain below 533 to 534 zone, as long as we maintain resistance, eventually the SPY will try to drop and sell off. But a clear break of trend is just to wait for a break above 534 and then buy the fucking calls. As long as we're maintaining under that, market is super bearish and gonna fucking flush. So simple, man. So I'm telling you, the best trades that are going to occur heading into tomorrow are going to be at 533 and 541. Those are the absolute best levels. You know, in terms of this overall video with the patterns, I'm really interested in puts towards that upper range. 533 is make or break, but it's going to be an easy way to determine make or break because with the information I provided, along with what it is that I'm seeing, it's so fucking simple. As long as we are just maintaining support and we're starting to break out a little bit above 534, we're going to push to fill the gap. But if the SPY is just maintaining below 534 and we're breaking down under 533 and we're just maintaining, not pushing above at all, the key is as long as we're not pushing above at all. Like I said, if we're pushing above and it just keeps dropping the fuck down, that's still considered bullish. But if we're just not pushing above it fucking all, then it's extremely bearish. And that would be a situation where, the worst level for puts could end up being the best level for puts where it just gaps down and has a gap and go and keeps on fucking selling off, which is not my favorite strategy. I don't like buying puts at oversold levels for the gap and go, and I don't like buying calls at the overbought levels for the gap and go, right? Based off of my experience and with the 2-day daily chart pattern that is set up, I will say the most likely outcome is that the SPY recovers first. The most likely outcome is but I'm not going to blindly trade off of this, but I'm going to keep this in mind and use the confirmations, right? And the key information, like I said, as long as we're staying under 533 and not pushing above at all, that's very fucking bearish. But if we're pushing above a little bit and dropping back down, it is still considered technically bullish, right? The key for the bears is to just stay the fuck under. If they can't stay the fuck under, then it's going to fucking explode and fill the gap, man. But based off of the most likely outcome, I will say that it's gonna try to react bullish, but in order for me to be sold off that idea, because this daily chart pattern right here is saying it could be extremely fucking bearish if we're staying under 533. So like I said, man, if we're just pushing above this 534, reacting as support, then I'll look for fucking calls. Ideally, it's got to be holding for like an hour to 2 fucking hours. But if the SPY just can't break above these 534s and we're just maintaining below, starting to sell off under this 532.50 level, then it's going to have a hard fucking flush, man. But like I said, based off of my experience trading it, is going to attempt to spike. But that's not going to be the main foundation because there's just too many other variables, man. We're going to have news coming out. Paul's going to be speaking tomorrow at 1:30 p.m. as well. That's going to be a massive fucking move that you guys do not want to miss trading with. We're going to absolutely crush that. But you just got to be a little bit careful, man, because I am seeing opportunities where it's going to try to recover and have that overall bullish dip buying opportunity where it can potentially just be something like this, where we're just having this sell-off, and then we start to recover, But if we just can't break above, so just like envision this chart pattern as, let's say, 534, if the market is selling off below 533 and we're spiking back up and forming lower highs, red bearish candlesticks, starts to drop back down to crack that new support, say it formed at like 532 or 531, right? We crack below 532.50, we can't push above 534, then it's going to be red and bearish. So another thing in terms of like, if you're really wondering like, man, this 533 level, should we play puts on it? It's like, dude, if we stay up below 534 and you're just seeing nothing but red bearish 30-minute candlesticks like fucking this, then yeah, you could try puts at the worst level, which could be considered the best overall level, because sometimes the market will play in the gap and go situations and we won't be able to buy puts to overbought levels in terms of speaking for the day, right? So if it's just maintaining below, cracking below 532.50, forming lower highs, nothing but red fucking bearish, then by all means, buy the fucking puts. But if we're breaking above 534, forming higher support, staying above 533, continuing to push, it cannot crack this 532.50, cannot stay below, and we're pushing above, buy the fucking calls. It's going to be so simple. That idea at 533 should be the most easiest opportunity heading into tomorrow, and another most easiest opportunity is going to be the 541.50. So I'm telling you, best possible levels to trade out tomorrow are going to be 533 and 541.50. Trade those main zones, man. Use the proper confirmations, wait for the proper reactions. So in terms of other levels for calls, if the market reacts bearish at 533, I'm going to give you some levels for calls, but you got to be careful because it could potentially close a strong bearish trend day. So if you do play that situation on the puts, leave some runners towards close, sell deep in the money, leave some fucking runners if we're staying below 533. But look, these are potential bounce zones. So in terms of bounce zones that I have for you, 516, man. 516, I mean, even 521, but ideally 516. I would consider 516 an auto buy level for calls, and I would keep an eye on 521 for calls as well. But wait for a green bullish 30-minute candlestick confirmation. If the market is staying below 534 and just forming nothing but red bearish candlestick confirmations, it's going to have a hard sell-off. And then just wait for calls once there's some consolidation, once there's a green bullish 30-minute candlestick confirmation. And the ideal levels to do that would be at 516 to 521. But if the confirmation forms above that, it could potentially bounce first, but those are the best overall levels, right? Another great level for calls is going to be 510. Another great level for calls is going to be 500 to 505. That's an auto buy zone as well. Another great level for calls in the future, you can write all this down. 482 is another auto buy level calls. So that's what I have for you. In terms of speaking for tomorrow, man, and like I said, man, just pay attention because this is going to be key, man. If you're just seeing, like you see how it's having this downtrend right here, and then it bounces, if we go under this 532.50 to 531.80 and we're just maintaining below this 534 and we start to go under this support and it's just nothing but red bearish, buy the fucking puts. As long as we're staying above this like 532 and then you see some breaks above 534, you see some higher support forming, then you can go with calls. But just understand, man, market is in extremely bearish territory if we go under 5 531.70 and maintain below 533 with lower fucking highs. For the bulls to show the fuck up, they need to break above 534 to be an extremely bullish. We need to push into 535s. If we're pushing that fucking high or higher support above 534, market's going to push to fill the gaps, and then we're looking for puts above that previous closing price towards that 540.50 overall range, man. Now, I'm going to give you a quick price ladder. Use the information and patterns that I gave you to your advantage, but in terms of the overall price ladder that I'm going to be giving you, this is going to be the price ladder, right? If one of the levels reacts bullish, then it goes up to the next level. If one of the levels reacts bearish, then it goes down to the next level. You can use the information, but don't blindly trade the information that I've given you, and use confirmations at the levels, because no matter what, with most likely outcomes, with the information that I provide to you, you need to understand that we're not going to blindly trade that or blindly trade a bias in a sense. We're going to confirm if the levels are reacting bullish or bearish, but we're going to use the information to our advantage in every way possible, right? So in terms of the ladder, this would be the ladder. Like I said, so you could save the levels, set price alerts, save the levels for the future, right? Because some of the levels are not going to hit tomorrow. 500 to 505 is a previous resistance to react as a support level, a break and retest, right? Strong zone to be buying call options. That's an auto buy level. 509 is key support. It's going to try to bounce first. Wouldn't really say it's an auto buy level, but a strong level. 515 is an auto buy level. This is pre-market support that has not been tested. You can see right here the higher pre-market support that was tested during normal trading hours bounce first. So it's likely going to bounce first at 516. That strategy has been working absolutely phenomenal this year. So especially if we're selling off tomorrow and we see a green bullish 30-minute confirmation towards those higher levels, it's going to try to bounce first at those overall levels, right? Next level above 521 is going to be towards this 526 range. Next level above 526 is going to be this overall 529 range, right? I mean, if we want to break it down, look, I'll break it down a bit more. I'll break it down a bit more micro, since the market hasn't been as volatile as last week. As of recently, it's been more choppy, but that should pick up hence tomorrow. So look, I'll do a little bit more of a micro breakdown for you. So in terms of the ladder, right? 500 to 505, just to adopt and adjust the price action accordingly as it's reacting now, but just keep in mind it should be a little bit more volatile tomorrow. So 500 to 505 is going to be auto buy level for calls. Next level above that is going to be this 509. Next level above that is going to be this, above 509. I mean, you could say right around here towards this 513, right? And I explained to you the special levels to be focusing on. Not every ladder is going to be special or a specific strategy. So if it's not special or a specific strategy, use the best confirmations. If the best confirmations are not there with the proper reactions and you're given it time, then just don't fucking trade at that overall level. Focus on the best steps, the best prices, the information I provided to you with the overall best levels, right? Next level above that, this is just a ladder that you can use to help understand where price is headed if it's reacting bullish or bearish to the next overall level. It doesn't mean you have to trade it. And some of the levels are going to have higher brackets. Higher brackets could potentially mean bigger overall profits, bigger moves. You need to be aware of where those big moves can potentially happen. The levels are going to help confirm that, right? So next level above 513, next level above this 513, right? So we said 509, so I said 509, 513. Next level above that is going to be this auto buy level right here at 516, auto buy level fucking calls. Next level above 516 is going to be this you could say this 521. Next level above 521 is this crazy make or break resistance level that's been reacting as support at this 523. Next level above 523 is going to be right here, this resistance right here towards this key 526 to 527 zone. Next level above that is going to be the 531. I'm telling you, this 531 to 533 range is going to be fucking crazy. Just put it this way, man. If we're staying below 534 and we go under 531 and we're just forming resistance in between 533 to 531, we go under 531, super fucking bearish, play the fucking puts. That pattern I showed you on the daily will repeat, where it's going to try to be a gap and go. Look, when we go under 531, massive fucking flush. It's going to try to flip bullish for the micro once there's a green bullish 30-minute candlestick. So we're really only bearish in terms of the current levels we're at, where we can play the gap and go if we go under 531 and we maintain below 533. That's when we're really only fucking bearish. But as long as we're holding above 532, reacting as fucking support, and we push above 534, then the market is going to do this, where if we do react as support, you can see right here, if this 533 reacts to support, we explode up to fill the previous closing price. You see how it's just selling off, forms a green bullish 30-minute candlestick, starts to break out. We're going to explode up to that previous closing price of the 537.6 zone. 2-point move above that is going to be a put option zone at 539.50 to 541.50, right? And if you just study, like I said, just look for the overall reactions, right? Strong break above 534. If we're not dropping below that 531, it's going to try to be overall bullish, right? It's really not technically considered bearish until we can crack below 531. But as long as we're not breaking out and maintaining below that 533, it's going to try to be bearish. But once we go under 531, super bearish. But if we're breaking above 534, we're not going below 531. We're holding higher support towards 533. Strong bullish move to fill the gap towards 540.50 and then overall sell-off, right? So 531 is the next level. If it goes under that, super fucking bearish. 533 is the next level. If we break above that, we're not going under that 531. We're maintaining 532 to a 533, and we're breaking above 534, forming higher support. Super fucking bullish. Next level above that is going to be 537.60. Next level above the previous closing price is going to be 539.50 to 540. The best overall zone for puts is going to be considered 539.60 to 540.50. 540.50 is the top of the breakdown retest level. Next level above that for a break of trend, very unlikely to happen heading into tomorrow, right? Which is why I would think it's a gift to be buying fucking puts above 539 to 540 zone if it's reacting bearish. That'd be the easy play on puts. But again, puts should be very fucking easy with the gap and go. If we drop below 531 and maintain below 533, that would maintain the trend bearish. For a break of overall trend from bearish to bullish, we need to maintain below 532, not drop it fucking all, push above 534. As long as we're maintaining below 533 and drop below 531, overall bearish, right? If there is a break of trend, this is more for the future. Doubt it's going to happen tomorrow. Push above 542, break above 543, react as fucking support. Then we go to fill the gap at 548, potential gap close reversal, not considered bullish until we break above 549, go into the low 550s. Then we finally have that move to 564, right? Those are the overall levels. That's the overall ladder. Listen, man, you use this fucking game plan heading into tomorrow, you're going to be printing at the speed of fucking light. You're going to be so fucking green. For those of you want to join our secure private organization, well, you use the information I just provided to you. You should be able to join for fucking free by using your fucking gains if you wanted to literally just join. Like, based off the game plan that I provided to you, along with what I'm seeing in the market, should be in a very easy day to be trading heading tomorrow. I'm telling you, tomorrow's going to be a day where you're going to want to be trading with us, man. It's going to be so fucking simple and easy to make money. We're going to absolutely crush it. The market is setting up for the most lucrative, predictable opportunity. If you want to join our group, it's the first link down below within the description. I'll quickly show you some of the trades. Like I said, G-Roar ended up going 6 for 8 on the overall day. So look, man, I'm going to break this down here for you. My trades, I waited till power hour to trade. Power hour starts at 3 p.m., but the prime time is 3:30 to 4 p.m. I did calls first. Based off the pattern where, you know, the SPY had a breakout, it had a retest, it formed this red trend reversal, in that particular situation, red trend reversal. The problem was I misread the overall, the red trend reversal. The problem was it already worked too much. So breakout, retest, red trend reversal, red trend reversal, red trend reversal, red trend reversal, spikes next 30 minutes, spikes next 30 minutes, it didn't spike the next 30 minutes. You see that? I bought these fucking calls, right around here, right in this overall candle. It's just, I jumped the gun. I jumped the gun too early. I mean, since I did get in, you could see right here, like 3:18 p.m., 3:19 p.m., right? So I got in towards the closing of that 30-minute candlestick. So this is the opening time. So the opening time was right here. So the problem was, I got in towards the middle of this candle, right? So based off the 30-minute chart, it was green, red, green, and it held support for 2 fucking hours. I got in towards the middle of this 30-minute candlestick, right? I got in because of green, red, green, but the issue was it was at a bearish placement. The market had a breakdown, it had a retest, it had a resistance for 2 fucking hours, right? And if you study the overall trend, red trend reversal, spikes, red trend reversal, spikes, red trend reversal, it could potentially go either way in this particular situation. But the main reason why I think this didn't really overall work out to an extent, I mean, you can see right here, green, red, green, next 30 minutes had a spike, but then it was bearish, then it sold off. The main issue was just the lower highs, man. Just the lower fucking highs. All of this support cracked, green, red, green, all this resistance are lower highs. But you could have also said that it was trying to have the breakout and retest, where it had the breakout, drop back down, and retest. So, man, it was a brutal fucking battle. It was an absolute brutal fucking battle. This was resistance. This was the breakout. This was the crack. This was the breakdown. These are the lower highs for 2 fucking hours. Green, red, green. So I tried it. It didn't work. It didn't fucking work out. It was a battle. It was a fucking battle. But those calls did have small fucking wins where if you did sell for a small win, you could have banked on that. But those trades didn't work out. Tried calls twice. Overall didn't work out. You could have sold for a small win. But look, I adapted right here at 3:36 p.m. and I actually sold those calls for a loss. I got out at 70% loss for each trade. So that's down 140% on those two trades. But look, I switched sides. 3:34 p.m. I ended up buying SPX calls at 140, and I ended up buying SPY 537 puts at 29 cents. I ended up buying SPX 5385 puts at 140. Both of these trades went up 100%. We held them. We banked at the speed of fucking light. Who's holding puts till close? 30 minutes going to close bearish. Previous support right here cracked. Retested, reacted as a resistance for 2.3 hours with the red, green, red, bearish overall 30-minute chart. So at this point, I was convinced that the market was going to close bearish because we had all of this support for fucking hours. The calls weren't fucking banking. We had a red, green, red form, and then last 30 minutes, right? So red, green, red, resistance for hours, breakdown, retest, red, green, red, super fucking bearish, all these bearish fucking wicks, right? So I was convinced that the market was going to close bearish in this particular situation. Also, if you studied this overall pattern right here, green, red, sell off. Green, red, sell off, right? That's why I was overall bearish. Red trend reversal right here after green, red, green here, red trend reversal, green, red, green. Market sells off hard. That's why I played for a bearish close, and I was able to recoup the L back and make more gains in that green in that particular situation because both the trades, we easily made 70 to 120% on those overall trades, and the puts absolutely fucking crushed it, man. And we were able to trim and get out of the vast majority of the position accordingly, literally towards the exact lows at 3:48 p.m. So it was a strong overall finish, and it really goes to show you, man, you don't need the highest win rate to do well with proper risk management and big percentage gains. I mean, this is another thing. Look, we had a member right here. They had 10 green days and 2 red days. So think about that. That's a green to red ratio of 83%. They're going green 83%. That is phenomenal, man. That is absolutely amazing. But they're still fucking red. That's why you need to have risk management. But this also goes to show you that the win rate does not matter. You can be green 9 for 10, but if your one red day is all your fucking gains, then the win rate doesn't matter at all. Like I said, when you trade farther money zero day options, you will realize that the win rate is actually the least important aspect to be trading the zero day options. I mean, if we had a guy go 10 for 12, 83% success rate, imagine what you can fucking do with the proper risk management with a low win rate. This is why I'm saying, man, the win rate is like the weakest foundation to have in zero day options. Options give you unlimited options, and if you trade farther money options, you'll understand that the least important thing is having a high win rate. If there's people going red with a fucking 83% win rate, then it really goes to show you that the win rate just doesn't matter in terms of farther money zero day options. Now, we do have the highest win rate in the game because we're the best at doing this, but it really goes to show you that proper risk management is everything, especially with trading zero day options, man. When you have a system that gives you unlimited options to make money in limited ways, you'll start to realize that the least important aspect of the system is the win rate. Cheap, low risk contracts, biggest percentage gains, situations where you create many systems. When you're down on a play, buy a second strike, it prints like fucking crazy. Look, man, I don't want to get into all of it. Like I explain it throughout the videos, watch every single fucking video. I'm literally explaining the same thing because it works and prints at the speed of fucking light. But you get the fucking point, man. It just goes to show you that the beauty of zero day options is it gives you the strongest foundation to be successful with a low win rate, right? You could be extremely successful with a low win rate. I mean, you should be able to figure out how to be successful with a 30% win rate at the bare minimum. It's like 100% losses, 200% win. You're green. You're fucking profitable. That's why I'm saying, man, risk management 101 is everything. You should never have a drawdown bigger than 5 to 7% on your overall account. And the way we structured our system is you can make unlimited profit percent returns, right? Now, obviously, if you have a pullback from the peak of your gains, 25 to 50%, you do have to force yourself to walk away because we're not going to go green to red. But some days you're not going to have that drawback, and it's going to be the biggest days where you can make multiple 1,000% profit returns, right? So with that being said, if you're risking 2% per trade and you average out to a 1,000% gain, you're going to make 20% return on your overall account. And worst case scenario, you can set it up to where from your peak, 25 to 50%, you're not going to get back your gains. You're going to stop trading if you lose that. And biggest drawdown on the day, 5 to 7% of your account, ideally no more than 5%, right? But if you're having days where you're risking 2% of your account and you're making 1,000% gains. You're making 1,000% gains in that situation. That's going to average out to a 20% return on your fucking account. Cheap, low risk trades, many trades per day, highest probabilities. So in terms of GROR's overall trades, I'm going to break this down here for you. Market open trade, Tesla puts did not work out. So the first trade did not work out. The second trade, 546 calls, 64 cents, adding to the winners, quickly went up to 90 cents at the speed of light, quickly went up to 110 cents. You could have made nearly 100% profit return at the speed of light, getting profit stopped out towards that overall short-term peak, right? So that made up for the L, and it should have made more than an L because we added to the winners and not to the losers. If you add to the winners, it doubles and it triples to increase your gains, right? So if you're in a trade and you lose 100%, and the next trade you take double the position size and you make 50%, you're at break even. And if you make 100%, you're at now double the profit of what you fucking lost, man, by adding to the winners. And the way we protect our new average cost, because when you're adding to the winners, you're typically adding 1 to 2 more than your original position size, 1 to 2x, right? So think of it as like 1 to 2R multiples, but we're not risking that, even though we're putting in that, because we set a profit stop. You set a profit stop above your average cost, it's impossible to go green to red, and you're gonna make more because you're adding to your fucking winners, man, and you're setting the profit stop above your new average cost. And when we enter those wins, we tend to have small winning moves in your favor where it's not a problem or an issue at all. It just keeps on working in a sense for the vast majority of the time, keeps on going up. Then eventually you get profit stopped out, move the profit stop up higher to ensure that you don't get back the bulk of your overall gains, right? So 546 buy calls for 52 cents a contract. These ended up going to 64 cents at the speed of light. Adding to the winners is another fucking win, 2 wins in a row. 534 SPY puts for 55 cents a contract. Everything is alerted 100% in real time. These are the option quote prices moving in real time, adding to the fucking winners, adding to the fucking winners. These went from 55 into the 60s at the speed of light. So small win. When we're up 15%, you got to set those profit stops. When you're up 15%, set the fucking profit stops. Losing is a personal choice. Going green to red is a personal choice. Sometimes small wins, sometimes massive wins where the market just keeps going in our direction. And then eventually we get profit stopped out in that situation when there's a big pullback, but we don't stomach the big pullback because we get stopped out when the profit stop is hit and we're moving the profit stop up higher. So say the contracts go down 50% in a single minute, right? Just as fast as they went up. Well, if our profit stop is in between that, we only stomach half of the pullback, right? You get profit stopped out as soon as the profit stop is hit, wherever you decide to move it up to and set it, right? So 535 SPY puts for 45 cents a contract. These ended up going to 76 cents at the speed of light for nearly 100%. You could have had 4 for 5. 4 for 5 by 1 p.m. My overall situation, you should have been fairly green, man. Like, I get it. My win rate was 50%, not the best, but in terms of the overall session, man, you could tell I was very confident in my puts, and I gave very great analysis on the confirmations with the red, green, red, the lower highs. It fucking banked, man. Both the strikes banked, and I even cut my losses quicker on those SPY and SPX calls at 70%. Normally, we just let them expire worthless and go to zero, but since the 30-minute candlestick closed red, I said, dude, I'm just going to get out, save the extra 30% per trade, and just size in heavy on the fucking puts, make it all back and more. And the puts went up over 100% profit return, right? So these are the play breakdowns you can see right here. 534 puts for 55 cents, adding at 55 cents, adding at 42 cents. You can see 535 puts for 45 cents, adding at 38 cents, sold at 76 cents, sold at 66 cents, right? So these are the full plays. Literally in 534 puts at 55 cents, adding at 55 cents, selling at 66 cents. That is well above a 30% profit return, right? 535 SPY puts for 45 cents, adding 50 more at 38 cents, selling at 76 cents. That is a 100% plus profit return. Adding to the winners doubles the wins. Like I said, if you take a loss and lose 100%, you lost 1R multiple. If you take a win and make 50%, but you add it to the winner, you just made literally double the fucking loss by doubling your position size. And if you make 100%, that's fucking triple in a sense. It's like, dude, losing is a personal fucking choice. This is why adding to the winners will always be the best strategy to be focusing on within this market. It's like you can literally be in a situation where you take 100% loss on an L, lose 1R multiple, you add to a winner, you could make back half the fucking L and still be fucking green. And then double the fucking L is literally what you lost in the fucking first place. You know, it's like having a 100% win as a 200% win because you doubled your position size. It's fucking amazing what you can do adding to the fucking winners, man. Do the fucking math. It's the best system on the fucking planet to be trading farther than 0-day option contracts. 540 SPY calls at 54 cents, went to 74 cents, literally within a minute. fucking crazy. Calls went from 54 to 77 cents, up 23 cents within a single fucking minute. Sometimes the plays play out at the speed of fucking light. 54110 SPX calls did not work out. But the SPX 5395 puts did work out 100 cents all the way to 200 cents. That is 6 for fucking 8 with more of a lame overall price action trading day. But if you did use my game plan, you should have been overall green by just holding the fucking puts. The calls were very challenging at 537. Could have potentially been a small win. Like I said, I was up first, but it didn't end up working out. And I wanted to hold for the bigger win. And it ended up being an L. But we switched to puts and fucking made it all back and fucking more, man. Got to add to those winners. So with that being said, man, if you're serious about trading a long side with us, is going to be the first link down below within the description. Our group is at all-time highs within membership. We are continuing to print at the speed of light, non-fucking stop, man. Is the first link down below within the description if you would like to trade alongside us. And I would love for you guys to be here, man. If you're serious about making money and you're positive, we would love to have you, man, because I'm telling you, tomorrow's going to be a great day to be here. The game plan is setting up for a very simplistic, overall lucrative trading opportunity. And I'm telling you, you're not going to want to miss it, man. You get to see me trade my game plan in action within the chat in terms of Team Roar as of now. You'll also gain access to G-Roar's trades, a real-time zero-day options trading alert system, man. Is the best dynamic duo. So if you're serious about trading alongside us, it's the first link down below within the description. Tomorrow should be an extremely easy day to be trade out, man. I'm telling you, just look at this overall move right here. Small spike, market sells off, and then look, if we're just reacting fucking bearish and if we're just going under 531, buy the fucking puts, it's gonna fucking print. If we're breaking above 534 and we never went under 531, look for fucking calls, green bullish 30-minute candlestick confirmations. If we break above 535, super fucking bullish as long as we're forming higher floor at 534. It's going to be a very first easy trade to be trading at. And then an auto buy level for calls is going to be towards that 516 to 517 overall zone. Listen, man, we are going to absolutely crush it heading into tomorrow. I strongly recommend, if you are serious about trading a long side with us, is going to be the first link down below within the overall description. So if you're serious about trading alongside with us, it's going to be the first link down below within the overall description. We are known for buying cheap, low risk, far out of the money zero-day option contracts. We're known for selling them deep in the money for the biggest percentage gains. And it's not just buy and sell alerts. We have proper risk management and we have the proper systems in place to create the overall experience for everyone where it's the cheapest, lowest risk trades that go up the biggest percentage gains, and we have the highest win rate doing this. That has always been the focus in terms of Team Roar, is to create the best money-making trading system that is the cheapest, lowest risk, lowest barrier entry for everyone, for people who have small accounts and for also the rich people who prefer to pay less and make the biggest percentage gains. By risking less, getting richer. That's what we focus on, right? That's the overall system, right? So we don't use stop losses. Our max risk per trade is what we put in to the overall trades, right? So that could be a couple percent of your account, 3% at the max ideally. In terms of your biggest drawdown, it should not be above 5%, absolute most 7%, right? So on a red day, if you go 5% or 7%, you have to stop trading for the overall day, right? It's going to be very hard to recover from a 5% drawdown in that sense. You don't want to be in that situation, right? Each trade, you can literally risk whatever it is that you want to. Obviously, if you have a small account, you have less of a cushion, so you do have to risk more. But the typical contract prices are $50 a contract, 50 cents multiplied by 100, right? So if you have $1,000, right, in your particular account, you buy one contract, you're going to be risking 5% of the overall account. So if you have $1,000 or less, just trade one contract. And in terms of trading with us, you can do very well just trading with one contract. Obviously, it's going to be a lot harder to succeed in that particular situation because you have less of a cushion, which means less time to survive. You're going to have to do fairly well, right? Obviously, it's a lot easier to trade with the bigger cushion to get started. Like an ideal amount is $2,000. I mean, risking like 2.5% of the overall account per trade is fairly reasonable, but still more on the higher side. 3% is considered high as well. I mean, if you're looking for a lowest risk way to do it, keep it at like 1 to 2%. Do not go above that. Obviously, small accounts have to risk more. That's the unfair advantage of starting with small, less of a cushion, more risk involved, meaning you're really going to have to make the most out of those first couple weeks, right? If you want to have a chance of growing the overall account. But, it's the lowest barrier to entry and it's the biggest percentage gains, right? So obviously much better chance if you have a higher cushion to start with, but you can get started just practicing with literally $1,000. And with us, do not paper trade. We don't encourage you to paper trade. Just use one contract, gain real experience, real motions, real money moving. Just use one contract. You can do very well trading one contract with us. When we're right, $50 turns into $150 to $200. When we're wrong, $50 turns into zero. It's the highest risk to reward, lowest barrier to entry. You can literally make, with just one contract, you can make $100 an hour trading with us. Some days there's like 15 fucking trades that are like all fucking wins. Other days it's not as high as a win rate. Every once in a while we do have a red day, right? But you're gonna see some days it's a couple trades. Some days it's beast mode. Fucking 15 trades yields to thousands of percent returns. Like I said, if you're risking 2% of your account per trade, and all the trades that you make with wins and losses factored in yields to 1,000%, even with the losses included, you're up 20% on the overall day, which could be $200 on an overall $1,000 account. But you're not putting in that much in terms of overall risk. You're literally just taking one contract, in a sense. Well, in terms of that situation and be half a contract, I mean, let's just use the example of fucking $2,000. They're just taking one time in terms of like the risk. You get what I'm saying, the overall max risk per trade, right? But the point is, man, most we put in is what we're willing to lose, our max risk per trade. There is no stop loss. We hold the trades. We let them expire, worthless go to zero, rarely ever sell for an L. When we don't time the trade right, sometimes that happens. They come back to life and still go green as long as you hold them, which could take hours sometimes, but as long as you hold them, because we trade the trend and we don't go far out enough to where it's not going to come back to life and to where it's not going to go in the money. So it's the cheapest, lowest risk contracts, but in terms of strike price selection, they are designed to go green at the bare minimum, but we focus on to go in the money and sometimes deep in the money, right? But we keep the focus on the cheapest, lowest risk barrier to entry, right? Especially for the small accounts in a sense, right? And in terms of more parts to the system, we add to winners. We add to winners to double to triple the gains. If you put in 1R multiple, that's your max risk. Now, how can you take on more risk? And how can you take on more risk without really giving back that risk? Quickly add to a winner when you're up 5 to 20%. Set the profit stop above your average cost. One small winning move in your favor, you're going to double to triple those gains at the speed of fucking light. Sometimes the trade quickly gets profit stopped out and you make like 15 to 30%. Sometimes the trade just keeps on going up, multiple 100% profit returns when timed accurately and when the market has that strong momentum during a key time, typically at market open or a power hour. And in that situation, you move the profit stop up higher, right? And once the market has a big pullback, you don't stomach the full pullback because you get profit stopped out no matter what the market does at your profit stop. And those are going to be the trades where you make the biggest gains when they just go straight up, eventually have a big drop, and your profit stopped out in between that drop because you moved it higher, not stomaching the full drop. And since you doubled to tripled your position size by adding to the winners, by adding an extra 1 to 2R multiples, you're going to make crazy fucking returns without taking on that extra risk. It is impossible to go green or red if you set a profit stop on your overall trade. So if you would like to experience this real-time zero-date options trading alert system with us and trade alongside us, it is going to be the first link down below within the description. Team Roar is massive. In terms of Trader Society, we've literally been around since 2017. In terms of Team Roar, that started in, it's been around since over 2 years now, right? That started in terms of late 2023. And as of now, in terms of Team Roar, the main focus of Team Roar is the best real-time zero-date options trading alert system where you can consistently make money in the cheapest, lowest risk way possible where the biggest percentage gains. Like I said, some of our days, some of our best days, if you take the trades, it yields to 2,000 to 5,000% profit returns, right? And then on a red day, you know, multiple L's could be a multiple 100% profit loss, could be multiple drawdown. But like I said, if you're ever down 5 to 7%, stop trading on the overall day. Do not have a bigger red day than 5 to 7% drawdown, right? And the green days can be unlimited profit potential. Sometimes our biggest green days can yield to 20 to 50%. I've seen situations where G-Roar's taken big size. He's had 2,000% returns on his overall account, playing riskier, taking bigger size, but also just a fuck ton of trades and the biggest percentage gains. So trading more means bigger wins. When you're actually trading and not over trading, as you're gaining more experience in the market, the trade should get better throughout the day, right? So we're able to make such massive profits in such a cheap, low risk way, you know, by trading more, making more trades, higher probabilities to make bigger gains, making more trades, more wins, bigger percentage returns. Adding to winners, double to triple to gains. This is how we're able to make such big gains on the overall day if you add up everything with adding to the winners and also the big percentage gains with all of the trades that we made, right? By taking cheap, low risk position sizes. And if you have a large account, you could just focus on the dollars. You don't have to focus on compounding your account. With a large account, you can literally risk as little as 0.5% to 1% per trade and take a fuck ton of trades and make massive returns on your account. Could be as big as fucking 20, 30% by risking small amounts of money. You can do the math on your own, man. Very fucking simple. If you're risking 1% of your account per trade and you make a 1,000% return and you're taking 1% on every trade, that yields to a 10% return on your account. And you're just risking 1% per trade on your overall account. Could make 10 trades or could just have one trade, right? You take one trade and you risk 1% of your account, most you put in, right? Let's say it's 1,000% win. Every single week we have a 1,000% win. If you have a 1,000% win, that means in that particular situation, with a 1,000% win, you can have 100% consecutive losses in a row and still be profitable. And that works both ways. You know, if you don't have the proper risk management, that works both ways. You know, like I said, we had a member, they had an 83% success rate, but they had a day where they exceeded their max drawdown and they chose to keep on trading. You know, they were likely over trading. They were likely sizing in too big, right? It works both ways. You know, if you're going to take massive risk on one day and wipe out 10 days worth of gains, then you're not going to be able to be successful with the high win rate. But in terms of being successful with a low win rate, proper risk management, right? The situation I like to use is 33%. If you have two 100% losses in a row, right? You're down 200%. One 100% win, then you're fucking break even, you're fucking profitable. And every single day, there's usually a 200% profit win. Now, think about it like this as well. Two 100% losses in a row, right? Say you added to a winner. Let's say you added to a winner, right? In that particular situation, you made a 100% return. Since you doubled your position size, you're now at break even with a 100% return. And you're not taking on that extra risk. You're putting in more into the trade, but you're not losing that because you're setting the profit stop. Adding to the winners is a way to increase your gains and a way to increase your gains without taking on more risk into the market. You're simply increasing your position size, which can double to triple your gains if you're putting an extra 1 to 2 R multiples. And in that particular situation, as long as you set the profit stop, it's impossible to go green to red, right? And we tend to have small winning move in our favor, and then it can turn into a massive winning move in certain situations, right? As soon as we add to winner, it tends to work in our favor instantly, where it just goes up instantly like 5 to 10%. It's fucking crazy, man. So with this, you're going to see that the win rate is the least important thing. Obviously, for small accounts, it's very important to have a higher win rate. In terms of some systems you can backtest with small accounts, you know, if you would like to backtest waiting for 2 losses in a row, say we have 2 losses in a row, very rare that we ever have 3 in a row. So if you just want to wait for us to have 2 losses in a row, take the third trade, likely going to print at the speed of light. Another thing you can do is if we're down big on a strike, say we take a play that's down 100%, try to take the next trade, right? But the people with a decent sized cushion of, I would say, like, you know, $5,000 plus, they try to keep their focus on, if not taking all the trades, or just taking the trades that are in confluence with what they see in the market. You can use our system in many ways to make money, in many ways to experience the overall markets to your overall advantage. It's very lucrative if you use this the right fucking way. And I'm telling you, like, just using the trades for your own confirmation to confirm overall direction, agreeing with overall bias in a sense of what you see. And also, man, just understanding we're entering the cheapest, lowest risk trades with the highest profit potential. So look, man, if you want to print at the speed of light, is going to be the first link down below within the description. The group is at all-time highs within memberships. You can easily make back the cost of the subscription on your first fucking day trading with us, man. You take one contract at $50 in the morning, flip it to fucking $150 to $200, make back the cost like that. If you're red, you can make it all back and more during the power hour trading session. Every single week, we make a 1,000% gain in here, man. So proper risk management, using the system properly. There's many people in here who make $500 to 1,000 days trading. The leader of Team Roar in terms of the lead trader is G-Roar. He's an anonymous multimillionaire, and there's many multimillionaires inside of our chat as well. Like I said, man, we have hundreds of members who've been with us for over 2 fucking years. We have the lowest churn rate in the industry. Only 10% of our new members choose to leave, right? Every single month. 90% of them choose to stay. Because they see the value in investing into a real-time zero-day options trade alert system. And they also see the value, right? Because it's literally the best trades in the market, but it's not just the best buy and sell alerts. It's literally the best system, where to set profit stops, where to move the profit stops, the trades and the best strikes to be making that are the cheapest, lowest risk with the biggest upside potential, the best times to be trading at, the most amount of trades on the overall day that can make you green in any situation where you're red. Unless you hit your max drawdown, you have to force yourself to stop trading. But look, man, 1 to 2% is a good overall situation to be in terms of the risk per trade. Once you go above 2%, it's going to be tougher for small accounts. So that should give you an idea in terms of like a foundation to start with the trades starting at typically $50 a contract, right? 3:30 p.m. to 4 p.m. we trade SPX. SPX is usually around 100 to 50 cents, and those can go from 300 to 500 to $1,000 plus a contract when we're right. So is the first link down below in the description if you would like to invest into a secured real-time zero-day options trade alert system, into a secured private network, private community of multi-millionaires, of traders who've been with us for a very long time that are consistently making $500 to $1,000 a day. Like I said, man, some of the multi-millionaires in here, they're making tens of thousands of dollars a week. In terms of G-Roar ended up making $100,000 last week, and on his red day, he only lost about $2,000, man. So it just goes to show you, options give you unlimited options. They give you situations where you can have the best risk management system on the planet, or you can be in a situation where you're literally right 8 out of 10 days, but due to not stopping on a 5% drawdown, due to poor risk management, due to over trading, due to continuing to risk more on a losing day, then you're going to get back a fuck ton of profits, man. It is what it is, man. It's a double-edged sword. You can have the best system with this, or you can have the worst system with this, man. Do not abuse it. Risk management 101 is fucking everything, right? Obviously, it's a lot easier to grow an account if you have a larger cushion, but it is what it is. You choose on what you want to optimize for, and you choose what you want to get started with. You know, that's your choice. You got to have the right mindset and the right perspective. If your account is that small and you choose to get started that small, then you're at more risk to lose that account, right? Those first trades are really going to fucking matter. We would never tell you though to paper trade. There's no point. Just literally get started with one contract. If your account is small, get started with one fucking contract, gain real experience, gain real market condition experience, right? But look, man, it's the first link down below in the description. At the end of the day, there's nothing better than trading far money zero-day option contracts in terms of day trading. Shares cannot change your life. Penny stocks are not going to change your life. In the money options don't make sense when you could buy something that's cheaper, lower risk with high win rate, even though we don't need it. It makes no sense to go in the money. You go in the money, your contracts are going to lose money at the speed of fucking light. With us, your contracts can lose money at the speed of light sometimes, but they come back to life and go in the fucking money, man. It's fucking genius, man. By far the money, sell deep in the fucking money. So is the first link down below within the description. Just another thing to note of is, man, every time, you know, like through the past, we're at all-time highs now. Like throughout the past week and a half, we got over like 200 members, and we've seen this happen, man. You know, options, zero-day options, especially when you're first getting involved with zero-day options, you need to understand, man, a lot of emotions can be involved, and you can go through a lot of phases, especially when you're in a company like this, man. There's a lot of phases to far out of the money zero-day options. Do not become delusional. Also, if you decide to walk away and cancel, leave on good terms, man. Leave on good terms. Look, man, we never seek revenge on anyone, but karma, it's a real fucking thing. And at the end of the day, we try our absolute best to show up and do the absolute best, not just for us, but for our group as a whole. That's why I'm saying, man, come in here if you're positive and respectful. If you don't have a lot of money, if you're a negative person, if you're in a very bad or poor situation right now, it's like, dude, it's best to just stay away and to not even fucking trade. If you're in a situation to trade, you've been through some things trading, you understand, you know, some things about far the money zero-day options, you have a positive mindset, you know, then join the fucking group, man. But I'm saying, when we get 100 new members, usually out of every 100, there's usually like a couple bad apples. There's usually like 3 to 5 bad apples, man. And we have thick skin. We're used to dealing with it. If we have to, then we have to ban the person. It is what it is. At the end of the day, it's a group of professional traders, but we do allow people to express and to be themselves. It's a fun community as well, right? But the last thing we want is negativity, is hate, is just people walking away on bad fucking terms, especially if you just fucking got here, dude. It's like, my gosh, have some fucking respect, man. At the end of the day, we do our absolute best, and we've put in the time, we've put in the work, and we put in the decades of experience. And this is a real fucking group of multimillionaire fucking traders, man. So look, if you decide to join, I would encourage you to join if you're in the right place or right situation to join, and if you want to join. Not everyone wants to gain access to the best trades and to gain access to a real-time zero-day option trading alert system and to optimize for this best style of trading and to be surrounded by a community who's focused on mastering this style of trading. It's not for everyone. But if you're looking for zero-day options trading, I can assure you, we have the best trades, we have the best systems, we have the best community, we're the largest. We're the largest company on the fucking planet with a real-time zero-day options trading alert system. Like I said, there's other companies, and some of them could be a little bit larger, but they just do buy and sellers. We have the largest community in the best system. This is a strategic system, not just buy here, sell here, set profit stops, move profit stops higher, add to winners, don't set stop losses. It's a strategic system, man. And you could trade alongside multimillionaires. You can gain a lot of experience by trading alongside us. Everything is documented in real fucking time. I mean, you're literally gaining access to a track record that's over 2 fucking years old, where you get to see all of our trades, timestamped in real fucking time. You can go back on Thinkorswim if you want to backtest things. You can use the on-demand button. You can backtest things. You can do whatever the fuck you want within our overall system. Just don't fucking abuse it and don't use it for the wrong fucking reasons. I already told you. We have companies out there who are trying to copy our fucking trades somehow, some way. There's people out there, they wait for our trades to drop 90%. Some of them take the opposite strike, or some of them just buy a new strike and create a system out of that, man. There's people out there who literally just try to copy our fucking trades. Maybe they take a new strike, or maybe they wait for the trade to drop a little bit. It's fucking crazy, man, because they know we got the best fucking trades, and they're not on our fucking level, man. And it's just fucking wild what's going on with zero-day options, man. You could use it for good, use it for fucking bad. Use it for fucking good. Come in here with a positive situation, right? I'm telling you, don't fucking come into a Far the Money zero-day options group if you're fucking broke and you're going through some bad shit or whatever the fuck, or if you just don't understand. It's like, dude, this company is absolutely fucking amazing and fucking insane. And zero-day options in general, you experience a lot. You experience a lot of phases and a lot of emotions. And especially when you're trading a group, alongside a group with more people, more different energies, with a community, then yeah, it's going to be an amazing and crazy fucking experience. You know, for some people it's good, for some people it's not the best. But you come in here, you're going to level up and you're going to gain results. But you got to come in with the right mindset. Everyone has a different experience, man. You need to understand, Far out of the money zero-day options is the craziest trading style that gives you unlimited fucking options. You can make anything out of this, man. Some people chose to make good things out of our system. Some people chose to make bad things out of our systems. It's like fucking crazy what you can do, man. But like I said, if you're looking for zero-day options trading, you're looking for an alert system, you're looking for a community that's giving analysis, giving their trades in real time, trade alongside a community, alongside the best real-time zero-day options trade alert system on the fucking planet, I would encourage you to join our group. Just make sure you're in the right situation to join. You're in a good headspace. You're in a positive headspace. You know, you can afford to lose money to trade. You know, some people are going to lose money. Some people are going to make money. The format's not going to work out for everyone. Some people are going to lose money for fucking years. And if they stick with it, they'll make it all back and then they'll become super successful. We have a member, Uncle DF. He was losing money for years. And then he figured out how to be profitable. It clicked for them, man. A lot of people are going to give up. Some people, man, that's why I would say, like, when we have so many new people join, especially unexperienced traders, it's like out of 100, there's a couple bad apples, and then we got to get rid of the bad apples, man. But the group is absolutely phenomenal. But when you do have all-time high exposure, and when you get like 100 plus members within a couple days, it's like you're gonna get a couple bad apples, regardless of what you're doing or who you fucking are. It just comes with it, man. I would just encourage you to just leave on good terms. If it's not for you, that is okay. And plenty of people who've been in here, it was not for fucking them, but they stuck it through. And they leveled up somehow, some way, and got fucking results, man. It takes time for shit to fucking click. It took me over 10 years to fucking figure this shit out, man. Have respect for what people do. We're good people. We show up. We do our fucking job. We get fucking results. We try our absolute fucking best. And our absolute fucking best is the fucking best you're ever gonna fucking see, regardless of the fucking results that you fucking get. I promise that to you, man. So, it's the first thing down below in the description. Losing is a personal choice. Come in here sharp when you're right. Have some money to fucking trade. If you want it, if your account's that small, understand you can quickly lose it all in that situation. But if you want to gain experience and trade alongside us, you can still level up in that particular situation, man. It's obviously a lot easier to trade with higher cushions, man. But just walk away, man. I don't want to deal with it. My employees, they don't want to fucking deal with this shit, man. At the end of the day, we don't have to fucking do this. And at the end of the fucking day, we do this because we love to do this. And we want to show everyone that we're the fucking best. And we want the largest and the best secured private network. But you know what? If that means sacrificing a couple bad apples and sending them to the fucking shadow room and banning them, then so fucking be it. Because we don't want to just be the largest, but we want to have the best secured private organization, the best community. And that relationship works both fucking ways. It requires us to be the best fucking leaders we can possibly be, but it also requires you to come in here in the right particular situation. If you're coming in here with the wrong lifestyle, wrong situation in your life, well, if you're aware of that and you're going to be a good fucking person, then so fucking be it. Just understand the results in terms of that overall situation that you're in, right? But if you're coming in here with a bad fucking mindset, I'm just saying, when you get hundreds of new members, there's a couple bad apples, and we don't want to tolerate that shit. We don't want to deal with that shit, man. So it's the first thing down below in the description if you're serious about being part of the most secured, best private organization. Like I said, man, we have high standards, man. We allow people to be themselves, but if people come in here, try some shit, or they're bad fucking apple, we just get them out. Because we are focused on building the best community, the most secure community. This isn't some free bullshit community of fucking bots, scammers, and haters, dude. If I wanted to do a free trial, I couldn't even do it. There's certain things I'm not capable of doing. And it's bad fucking things, and it's also things that are going to lower our vibration, also things that are going to lower our community standard, right? There's certain things we just can't fucking do. If I do a free fucking trial, bots, haters, God knows what is coming in, right? People who just want to destroy our fucking company, people from the past. Who the fuck knows, man? We got to keep that shit fucking out. That's why I'm saying, man, we got high standards. We want you to have the best experience. It's the first link down below in the description if you want to trade alongside a community who's serious about making money, who prints at fucking light speed, and who has the highest, best standards within the game that can print you money at the speed of fucking light. The way to learn how to trade is to trade. You trade a lot, you're going to learn how to trade very, very quickly. You stick this out, you give this a chance, you'll find out if it's for you or not. You come in here with the wrong attitude, the wrong mindset, give things a couple days, oh, it's not for me. You ain't finding out shit, man. You ain't finding out shit with a couple days. Took me over a decade to figure this shit fucking out. A couple days ain't gonna tell you much, man. Give it some time. Give it a couple months. At the bare minimum, give it a couple months if you decide to join. And if it's just not for you, just walk away clean on good terms, man. Because like I said, we don't want to deal with it. If there's something we have to fucking deal with, it's just you're fucking out. There's nothing to fucking deal with. It is what it fucking is, man. It's like, we allow people to express themselves, to be themselves. We have a good time. We love what we do. We love working with our members. But if you're in here with the wrong mindset, bad attitude, talking shit, doing whatever, bringing down the vibration, bringing down the energy of the group, we are not here to fucking tolerate it. And we're not some delusional fucking people who are just, delusional and fucking all positivity and hooray and hoo-yah. No, we are real fucking people, and we get real fucking results. And we won't be green every single fucking day. And we will have red trades. It is what it is. That's life. That's fucking trading. But at the end of the day, we are fucking real, and we show the fuck up, and we do our absolute fucking best, man. If you stick with us through thick and thin, you can get fucking amazing fucking results, man. But if you're not willing to go through any fucking rough times and you're going to switch up at the speed of light, it's best for you to not be here in the fucking first place, man. Trading is real fucking life. There is highs and there is fucking lows. Right now, our trading is at all-time fucking highs. Market, best time to be trading zero-day options, got the biggest moves, highest volatility. Our group right now, all-time fucking highs. And what comes with all-time fucking highs is some negativity and some people trying to bring you down. That's why I said we are strict about it in that sense. We allow people to have free will, be their amazing, crazy, fucking awesome selves. But if you have the wrong attitude, negative fucking attitude, it's like, dude, you're just fucking out. Go somewhere fucking else. This is a professional group that trades at the speed of light, prints at the speed of light, and we love what we do. We love to work alongside our members, but we're not going to allow anyone in here to bring the fucking vibe down. And if you're seeing someone bring the fucking vibe down, then you can call them out as well, man. So it's the first link down below in the description. If you're serious about trading alongside a group of professional traders who are themselves, who absolutely love to fucking trade, who print at the speed of light, everyone's on a different journey and a different process within their journey. And if it's not for you, worst case scenario, you can just walk away and cancel. But best case scenario, even if you decide to cancel, you should gain something out of this. You should gain some sort of positive experience, some sort of results. You should learn something, especially trading alongside us and gain the experience trading alongside us, especially with zero-day options, man. So look, it's the first link down below in the description. Come in here with the right mindset. If you're ready to join, it's the first fucking link. This is the best time to fucking join.